today I've got Zack Brittain here to talk about Kitchener, Waterloo, and Cambridge. Zack, what's going on in Waterloo?
We're going to share some of the projects. We've done 10 ADUs now, and then we got our investor hot list. And at the end, I actually got 2 deals. The trend for the percentage of people owning versus the percentage of people renting is going to continue. Ownership percentage is going to decline as affordability continues to go the wrong way. 3-unit property in Kitchener. This is a legal triplex. 2 of the 3 units are not rent controlled and are brand new as of 2 years ago, fully permitted. A tenant's already placed in there. This makes over $6,000 a month for $1 million. Okay, so if I just did the quick napkin math, the so what is you could put 20% down and your cash flow 500 a month. People were buying duplexes, triplexes, and fourplexes 3 years ago that were break even for 300 grand more than this. It is more likely that prices will be higher in a year or 2 from now than they are going to be the same or lower for good assets.
Welcome back to the Canadian Real Estate Channel. I'm Adam J.D. Martin, your host, and today I've got Zack Brittain here to talk about Kitchener, Waterloo, and Cambridge. Today, we've got an absolute masterclass for you. We're going to be breaking down a bunch of the data about Kitchener-Waterloo. This is not just a standard market update. We're talking through deep stats on the Kitchener-Waterloo area, some of the different regions that you probably don't have a full understanding of at this point. And we're going to unpack some deals at the very end where we talk about multi-unit sales and some of the strategies we want to use to continue sourcing deals in an uncertain market. Zack, what's going on in Waterloo?
Guys, today we are actually going to do a deep dive into Waterloo Region real estate. We're going to cover some geographic stuff. We're going to cover trends in the major cities, Kitchener, Waterloo, and Cambridge. I got population data. I got economic data. I got employment data. I have some real estate data for you guys. Adam, this is a good opportunity for anybody that either is active and needs a refresh, or for those of you that have no idea about Waterloo Region real estate and you're considering it maybe as a part to expand, to move to, or just to learn more about a relatively booming market in Southern Ontario. Before we get to that, though, I got ADU open house event coming in April. We're going to share some of the projects. We've done 10 ADUs now, and then we got our investor hot list. And at the end, I actually got 2 deals. I got lots more than that, but these are 2 deals I wanted to highlight on this video as I feel like they offer great value, which is kind of what I want to be doing with our deals and our investor hot list. So let's show off the ADU, man. Listen,
Awesome.
Boom. Here's one that was finished about a month or 2 ago. This is the Forest Hill neighborhood. This is the second one we've actually done on that block. 2-bedroom, 2-bathroom. I think for people who have no idea what ADUs are, or investors that are kind of curious about what the numbers will look like, I've seen kind of a 50-50 split so far, Adam. And what I mean by that is half of the people that we're doing these for and kind of getting stuff ready for are investors. You know, people have owned maybe a duplex or a triplex for a little bit. They don't want to sell it. They either have equity or cash to add value to it, and they want to pop an extra unit on a property to boost, value and income. And then the other half is owner occupiers. Either more mature kids doing it for their kids or their parents, i.e. the grandparents. And actually some, people around my age, mid-30s to mid-40s that are going to be doing it for their parents, right?
Yeah.
You got a property that's, people like living at, but it's either too big or they don't need all that space. And you can go build up to 850 square feet of exactly what you want in the backyard. Mom and dad don't have to move, or the grandkids can take that because they can't afford a $700,000 detached house. Like, dude, you're building an 850 square foot bungalow in your backyard, and it's way cheaper than going out and buying a condo or something else.
And here's the thing, like my grandparents are currently doing the home search, right? And it's this real struggle to balance the size of a building, its amenities, the neighborhood, and being a bungalow, because obviously everybody as they're aging wants to avoid stairs. And so what I love about this is it allows families to combine their assets, right? So now all of a sudden, instead of having 2, 3, 5 things you need to service to take care of the land, let's say, you guys can combine your freaking lawnmower, and that's one less thing to worry about. So for a multi-generational home, it makes a lot of sense. You get to share a lot of resources. You technically get to build the exact thing that you want. It's maybe limited in size, but at the same time, a lot of these people are looking for a smaller opportunity, right? They're looking for that 800, maybe 1,000 square foot opportunity that's not necessarily in a condo building where they're
Yeah,
battling elevators and all these other things. And you get to be close to your family, right? Or close to somebody else. And if you're looking at this as a rental opportunity, you already have the inventory. You've already put out a bunch of this startup capital to get into the property that you hold. So
yeah.
adding these properties with the limited actual capital that it takes with the new lending that's available on these types of products, it's a fantastic opportunity to increase the revenue of your property.
Big time. What's difficult but also interesting is how unique they are, right? Like, you know, legally speaking, technically speaking, you could put up to 3 units on any lot in all of Waterloo Region, technically
Right.
speaking. Now it's just if the size requirements and all the other things will allow for it. But what's really interesting is how much flexibility this gives you. So you can build this without taking any cash out of your pocket if you have equity in your property. There are financing options available that will use that equity to pay for the build and then put a whole new mortgage on the whole property, and family can move in. Or if you rent out the property, you can use the rental income to offset the additional mortgage costs, right? But what's really cool is you have, say, your parking right here for your original house. You can slide an extra parking space right beside it so that you aren't blocking in any parking. Your parents, your kids, or your tenant just slides to the parking spot right beside you. They take their private path around to the backyard. You can separate it by privacy fences if you want, and they have like a totally separate detached structure. Like, there are so many ways you can utilize that, and almost guaranteed, unless you completely blow the load on the budget, almost guaranteed you are going to be increasing the value of the property beyond what it costs to build, right? So costs from these are typically like, if you build a smaller one bedroom, you'll be close to 200K all in after taxes. That's everything. Separate water, separate gas, separate hydro, like done, completely separate unit. So that if you do tenant it, they could just pay all their bills. Their systems are totally separate from yours. They don't impact your original home, right? And if you go all the way up to, an 850 square foot with a full basement, high ceilings. You could even do 2 units on a duplex, on an ADU, if you really want to, side by side or above each other. We've seen plans get approved for 2-story ones as well. You walk in the main floor, 2-bedroom unit there, staircase up the side, 2-bedroom unit right above. It's almost like a little 2-story house in your backyard. So there's a lot of different ways to put these together. But we just see so many benefits for them. And now that we've really gotten a lot more under our belt, we're building another one on one of our own properties that we're going to be running the event at. But this is like a more of like a standard build. They chose their siding and their exterior finishes on this one. This was a custom build that we just finished. This is a 850 square foot, 2-bedroom walkout basement, a little bit of the snazzier finish on it. But here you can see total wraparound deck, or sorry, total end deck off the back there, all the windows and the sliders off the back. On the inside of those sliders in that deck is like the kitchen living area with gas fireplace, vaulted ceilings, big 8-foot island. And then underneath, you can barely see in the photo, I apologize, that's the walkout basement. So those are
Beautiful.
pretty rare to be able to get. Like, you need to be in a very specific kind of lot for those to make sense. But you basically have a level in the basement that doesn't even feel like a basement because most of it is above grade. So this is a more custom option. This will be on the higher end of the price scale, but again, depends on how sexy you want to get with the finishes. This is for an end user, so, and the lot and the area kind of commands this type of property. So you can
Yeah.
really go as ball to the wall as you want. But if you're looking for something more economical, or you're looking to just stay within a budget, like, there are options available. So what I'll do is, our investor hot list gets the first dibs on our events. So we host maybe 3, 4, 5 events a year, whether that's investor meetups and networking events, or open houses for our construction projects or our multi-units and ADUs. A big barrier to these, Adam, is people just don't know what they are, right? Like, you think it's going to be like, you see the tiny home, like you see the tiny homes TV show or whatever, and you're like, oh my God, this is literally 200 square feet on wheels. Guys, I mean, we could build you a 200 square foot one, and there's more economical options out there, but like, these can be like second homes. So,
Yeah.
and it could really be whatever you want. So I find the biggest aha moment is like, oh, like, this is what it looks like? Huh. You can put them here in your yard. This is how you kind of maneuver the layout for the parking, the walkway, the actual structure, the yard space. Like, seeing is just so much more powerful. So if you're not already on our investor hot list, Adam, guys, girls, the link is going to be in the description. I send out a weekly email. This is where I send my deals. This is where I send my data. This is where I send my contacts. But I also send out event details. So we're going to be doing some open houses in Kitchener. This one's in Kitchener. I'll likely be releasing that first week of April for the second, third, and fourth week. If we can't get you out for any of the open houses or the group events, we can start booking in private tours. So if you want to understand what they look like, how much they cost, how they set up in your lot, and then compare it to your own property, we can set up individual tours with our contractor or myself and my partner, Matt, to take you through individually and get you all your answers. So head over to the Phipps Brittain Real Estate /contact page. That's the investor hot list. If you guys are here for the deals though, Adam, we're going to cover those. I got 2 deals I'm going to cover at the end of this video that are chef's kiss, a bigger purpose built multi-unit, and then a smaller, newer triplex, cash flow, baby. But that's at the end. If you guys want those deals as well, I've already sent them out to our investor hot list. They get first dibs. Adam, you get front row seat to a free Waterloo Region deep dive.
Love it.
You guys and girls are watching the video. If you guys are, I'm a big podcast guy. I drive a lot, so I don't get a chance to watch as many videos as I'd like. But if you guys got this on after work, or maybe you're at the office, you guys want to catch up some emails or some data crunching, flick this on, turn the volume up. I'm going to go through a lot of data. And then when I wrap this up, I'll hit the interactive chart so you guys can see some of the real trends and the numbers for all the different market segments in Waterloo Region. But for about another 5 or 10 minutes here, I'm going to rhyme off some economic data.
Let's
Okay.
go.
So this is going to be brief. That sexy red line I hand drew in there, that's the 401. If you guys have no clue about Waterloo Region, this is the quick and dirty. Cambridge, closest to the 401. 401 separates Kitchener and Cambridge. Cambridge is closest to the GTA, right? But it also has the biggest variance, right? 3 old towns that grew into each other, super confusing to drive around. A lot of the expansion is close to the 401 and then really far away from the 401. Lots of industrial in there. Kitchener, right northwest of the 401, and then Waterloo, the furthest away from the 401. Your Wellesley, Woolwich, Wilmot, and North Dumfries. This is primarily small towns and hamlets, lots of farming communities out in there. Interesting note, though, Adam, you used to be able to get sexy deals. You go to Ayr, or you go to New Hamburg, or you go to, Elmira or St. Jacobs. Ooh, I can save 50 or 100 grand. Wrong answer. The old locals in Waterloo Region have started to move out there to gobble up these, properties in nice, quiet suburban neighborhoods in these small farming towns that have expanded. And all they're building out there now is big ass mansions. Your 2-story detached, 2,500 square foot double car garage, million plus. They're not building a ton of, starter homes, whatever those are these days. So the price gap between these smaller towns and hamlets is much, much smaller. But long story short, Waterloo, Kitchener, and Cambridge, those are the bulk of the region. You're going to get probably about 90% of our population just in those areas alone. All right, hit me with that control tab. There we go. And then quick hits here. Waterloo, furthest away from the 401, Adam. Most expensive average price point. The city is the biggest pain in the ass to deal with compared to Kitchener and Cambridge. Property taxes are a little bit higher than Kitchener and Cambridge. Overall, on average, the highest quality city compared to Kitchener and Cambridge to live in. Like if you're just looking at overall quality of neighborhood, on average, Waterloo has that compared to Kitchener and Cambridge, right?
Yeah.
Broad strokes assumptions here, ladies and gentlemen. I would love it if somebody from Kitchener-Waterloo or Cambridge hopped in the comments section, just ripped me up for my opinion here. Just note, guys, this is just the opinion of me.
I mean, I've lived in Kitchener and Waterloo, and I prefer Waterloo. So,
yeah. And so the old school beef is Waterloo, Kitchener. Old school money in Waterloo is like, I won't even drive through Kitchener. And then everybody in Kitchener is like, I won't even drive through Cambridge. And then Cambridge is like, guys, we're not that bad.
We're
what
just
the heck's
here.
Going on? We're
here for attendance.
We're just being a nice guy,
Yeah.
So that's the general old school local comments. Now Kitchener, it is the largest geographic area and is the largest in terms of population and properties. It's got the most for investors. It's the most common because it just has a larger volume of opportunities, right? A lot more purpose-built rentals in there compared to areas like Waterloo, and it's less fragmented than Cambridge. It is going to be in the middle in terms of average price point and quality of location, but their city is typically seen as a lot easier to deal with for permits, minor variances. They're, what was Dougie's plan? Build more faster. build something,
Build
whatever.
better, faster, or something like that.
Something like that. Shitty
I
slogan.
don't know.
But regardless, Kitchener is kind of adopting that. Now, if you are listening to this and you're punching your steering wheel, or if you're at the home office, you'd be like, Zach, you're crazy. City of Kitchener sucks to deal for permits. Let's just be clear. All cities suck for permits,
Yes.
period. That is just the baseline. But in
Yes.
comparison to that baseline, Kitchener's pretty good. All right. Now, Cambridge, closest to a 401, closest to the GTA, super fragmented in terms of location, quality, and price. So, the way I like to describe it is Cambridge has probably 5 of the nicest neighborhoods in the entire region, but it has probably 10 of the worst, right? It's think about this. You have 350-year-old cities that weren't designed to connect to each other that eventually grew into each other. So it is the most confusing. It's the most fragmented because you have a lot of really old areas that haven't been gentrified, haven't been reinvested in. This Cambridge was really struggling until about the 80s or the 90s when manufacturing really took a hold there. So, your city is about 50-50 to deal with. It's either the best experience you've ever had or absolutely insane. So take that with a grain of salt. My Zach notes on A, B, C, or D neighborhoods. Waterloo, typically in an A and a B neighborhood, pretty much everywhere you go. Kitchener, tiny bit of A, mostly B, tiny bit of C. And then Cambridge, overwhelmingly B with a couple little sprinkles of D in there, right? There's just that a little bit of that bigger variance. That being said, opportunity lies in all of these areas because they have employment, because they have proximity to 401, and because there's probably only 10 neighborhoods or 10 streets in the whole region that I would say, hey guys, unless you really know what you're doing, maybe we stick away from that street. But like
Yeah.
overwhelmingly quality area to like live and invest in. Average income support it, education level support it, economic development supports it. That kind of stuff is what we're going to get into now. Um, Population, we're just sitting just under 700,000 now. I think we're closer to kind of that 680 after 2024. Population growth, we've mentioned it here before, folks. Population growth in Ontario, specifically Southern Ontario, will diminish as they've tightened up
Yeah.
our federal rules and regulations regarding immigration. So don't expect aggressive population growth for the short term. Employment was kind of interesting though. So we have, almost half of our areas employed. But what's weird is there's still a pretty big chunk of population that is older, retired in Waterloo Region. And there's also a really big chunk of a lot of newcomers that are here for school or just getting full-time work permits that
Yeah.
aren't going to show up on this. Now, that's it everywhere in Canada right now, I think. But what was really interesting was our unemployment jumped up. We saw not a small, a couple point tick up in unemployment between last year and this year so far. So I'll be tracking that pretty closely. If we start to see rental rates come down, if we start to see more defaults, that would be a concern that I would really be watching really closely. We haven't seen huge jumps in that data yet, mainly because that data is not readily available for 2024 that
Yeah.
easily. And it's really just not that accurate yet. So if we get another round of census data in the next year or two, that would be really interesting to kind of see that type of stuff in the demographics for employment and education. But you know, it's been coined the next tech hub, the Silicon Valley of Canada. Now there is a lot of that there, but people need to remember we're a manufacturing baby.
Yeah.
Like almost 20% of our entire employment is manufacturing. Now, what's really interesting is a lot of that manufacturing is going away from your nuts and bolts, transportation, infrastructure development manufacturing to like high tech, aerospace technology, a lot of software in this area as well. So like that will start to shift more towards the tech, but 10% of our industry is tech. And then we have insurance, finance, education, research, and healthcare kind of bang, bang, bang under that. A
Yeah.
lot of sales and retail in our area as well. We're a small city, but in Canadian standards, we're pretty big for almost 700,000. Okay. Medium income, we're 92,000 for median household income. 69,000 is your average salary for Waterloo Region. That was, I think that was like via ZipRecruiter. So like take that with a grain of salt, ladies and gentlemen. But we will see that rise as software and as tech continues to grow. But just know like those types of positions and those types of businesses, they're very top heavy. The people at the top that are, running, starting, and operating these businesses do
Yeah.
very, very well. We're going to outsource all that smaller stuff. Philippines, Asia, India, like they will get like all the big insurance companies in town have already started to do that 10 years ago.
Yeah.
So, if you're working local and you're doing well, good for you. But expect that trend to continue as the software and as the tech markets continue to grow here. What was interesting about education was this is pretty much dead in line with national averages. 30 to 34% uni. I think it's 34% national average or 33. 22% college, 26 have a high school, 11% have no formal training or education on the books. So we're fairly in line. What I thought was really interesting was even in our neighborhood in downtown, Adam, you can't go more than 3 houses without running into somebody that's got a master's or a PhD. It's
Yeah.
wild. And
Yeah.
that's primarily because a lot of the people that are picking up properties in that area are buying them off families that have been there for 30, 40, 50 years. And these
Yep.
are people that either grew up in the area or are moving from the GTA or out west that want a detached house within walking distance of stuff, but and want that old, neighborhood charm and that sense of community and family. And like the schools downtown Kitchener and uptown Waterloo that used to be like, ooh, maybe these aren't the best schools. Even the public schools are like starting to rank a lot higher
Yeah.
because a higher level of educated individuals staying in town and actually having families in those areas now, as opposed to
Yeah.
the old cronies. What do they say? The newlyweds and the nearly deads. Unless you're in
Yes.
the suburbs, that's a lot of downtown and uptown locations. So I thought it was interesting how closely that mimicked national averages.
That is
Um,
interesting to me. I would have thought that there would be a above at national average education level there just based on being there. Like I lived there and experienced a ton of very well educated people, but I guess that's also part of like the social economic group I was hanging out with. But it's like,
Absolutely, and I
but
also
there's,
just think that that trend will change. Like, I think the percentage of people that are considered higher level of education will continue to rise pretty much
yeah,
everywhere in Canada,
yep,
but specifically outpace here as a lot of the newcomers have their designations either recognized or have gone and finished their 1 or 2 year refresher courses. Because I can't tell you how many guys and girls I've met, a lot of the population coming from Brazil, from India, from Nigeria that have 4 year degrees from reputable universities there, but they're not recognized here. So they're doing
yeah,
college or uni 1 or 2 year courses, right?
yep,
Like even people that have double degrees, like a family friend of ours moved over, he had a marketing degree and then did software engineering over in India. And then came here and he's like, I can't get a job because they're not recognizing it. I went to a reputable school. So he's going to take a 2 year at one of the unis. He's got freaking
yeah.
8 years of school under his belt.
And
Like,
probably that inexperience as well. So I think a
oh
lot of
yeah,
people are
like
in
in
that
mid
boat.
30s. Yeah.
I used to,
So,
when I lived in Kitchener, I was a technical recruiter at the time. And so what I was doing was recruiting for architects and engineers. And many of the candidates that we would talk to would be new to Canada. They'd come right to Waterloo Kitchener area and they would be PhDs or master levels engineers and architects from abroad, wherever that may be, right? Saudi Arabia,
yeah,
Iran,
oh yeah.
all over the place where they were like seriously high educated people with tons of experience and wicked portfolios. And a lot of companies in a lot of places just wouldn't honor those degrees, right? They just wouldn't honor their experience, which is, it's a really tough position to be in. So I think there's a lot of people that are very educated in that area and a lot of people also that are new to Canada that are trying to get those accreditations recognized. So I think that's
Yeah.
definitely an interesting take there.
We're going to talk about it right after this slide though too, but what's interesting is until about 10 years ago, a lot of the people that would come here to get educated, they wouldn't stay. They're going out to California, they're going out to Vancouver, they're going back to Toronto. But now there's enough here. And I think the signals are pointing that this is going to be a place that's going to remain either medium or increase in quality to live. And it's significantly more affordable than your areas like California, like Toronto, like Vancouver, and even Montreal, that people are going to be willing to stay because there is actually opportunity and it is affordable. And there is enough amenities for the type of person that is going to be a small business owner or a high income earner or somebody who is educated and will command those types of amenities. So, it's moved. I said it before. We've really moved from city population but town feel
Yeah.
to bigger city population but actually a city feel. And I
Yeah.
think that will help maintain some talent here. At least I hope so. Please
Yeah.
stay.
I think
So,
the amenities and the tax environment have led to a general brain bleed, like where
oh,
people will come get super educated at like Lazaritas Business School in Waterloo, or sorry, at Laurier, and then or go to Waterloo for something medical and or mathematical or engineering, and then they just leave, right? Because the amenities aren't here or the tax situation's not favorable. But
yep.
it does look like there's potential like good changes on the horizon for those things, and the amenities are already there. Like Kitchener-Waterloo is a different city than I lived in for sure. Like the last time I drove through there, I was like, wow, this is like really getting cleaned up, and there's a lot more here now. A lot more
100%.
for like the average person who's going to live there, not just be a student there.
Yeah, that gap, right? That gap between like if I want more than what the city has to offer, I really got to go to a big city and I got to pay the big city prices. So
Yeah.
for those that aren't willing to do that, there's just more to keep them here now.
Yeah.
And the region is trying to do a lot of the right things. Some other interesting data points that I've picked up. I mean, I track this stuff. This is all I do. But so just I thought these points were specifically quite interesting was um 68.2% of people that live here actually own their property, which was down
Mm.
from the 69, almost 70%. Now, Adam and I have talked about it off video, and I mentioned it multiple times in my videos that the trend for the percentage of people owning versus the percentage of people renting is going to continue. Ownership percentage is going to decline as affordability continues to go the wrong way. If real estate cost of living continues to become less and less affordable, less people will be able to afford to purchase and own property, which means a higher percentage of our population in Waterloo Region is going to rent. I expect that trend to continue pretty much everywhere in Canada, not just Southern Ontario, not just Waterloo Region, but overall in Canada. We are going to slowly trend towards a larger percentage of residents actually renting property. Plain and simple. Average rent, though, average rent stayed fairly similar compared to last year, but we will see vacancies increase. As vacancies increase, average rent will start to go the other way, right? So what we've done too is vacancies are the bane of my existence. I refuse to accept vacancies. I'm a vacancy. I was going to say N word, not the Nazi word. It's a little true, guys. You know, I am like that's my thing. When I'm managing properties, I refuse to take on vacancies
Yeah.
because they just kill your investment, right? So what I'll do is I will put my rent slightly less than what I know it will be worth, and I'll just get a bunch of applications. I'll just take a better quality application.
Yeah.
They're less likely to damage the property, more likely to pay on time, more likely to be a good fit, and they're more likely to actually give me proper notice and follow the freaking rules. So when they do move out, I know I can work out some arrangements that work best for everybody. So for vacancy rate, 3.5%, that's up. Our vacancy rate was below 2 for years and years and years. Average rent for the whole region is 1658. That will be dramatically different for what is the south end of Cambridge versus what's downtown Kitchener, which is the
Yeah.
northwest side of Waterloo. So this is like overarching. If you guys are like, Zach, I'm running loose numbers on a bunch of deals in Waterloo region, use these averages as your baseline and then email me to adjust based on the quality and location of the properties you're looking at.
Yeah.
You're 1,200 for a bachelor, 1,450 for a one bed, 1,700 for a two bed, and 1,900 for a three bed. These are averages, guys. Okay. Now, what I thought was interesting was approximately 170 million between federal, provincial, and local funds set aside for affordable housing. You see 170 million, like, ooh, Zach, that's a lot of money. Peanuts. Peanuts. I need to add an extra zero on that to even put a dent in the affordable housing issues here in Waterloo Region. Without even looking at it, I know this is so freaking light. So, like, it's the government has said a lot of things about trying to make housing affordable. Not happening, guys. Long term, not freaking happening until dramatic things change. I've hammered on it before, but I just thought it was really interesting that I could dig up that that's how much cash they had set aside. You know, we're talking about building a couple hundred, not even a couple hundred affordable units a year. Like it's a joke. It's actually
Yeah.
it's really a joke, and it's going to hurt a lot of people in Southern Ontario, specifically in my backyard, and it sucks. So I felt the need to kind of bring it up. Like, yeah, you know, they set aside some cash, but like from what I'm seeing, it's not even moving the needle. So what is interesting though is we are investing in big infrastructure projects, Ion expansion. So that's the local light rail transit that connects Northwest Waterloo all the way through Uptown Waterloo, downtown Kitchener, and out to Fairview Park Mall. That is going to get extended out to Cambridge and go through central Cambridge. Chef's
Nice.
Kiss, we've talked about it. There's a video with a map on it on the YouTube channel already. You can Google it or send me an email. I'll send you everything you need for that. If you're looking in Cambridge specifically, those locations have already been confirmed. So the early adopters have probably scooped up some of the sexy development opportunities, the low hanging fruit, but there is still opportunity out in Cambridge. And then the Waterloo Hospital out behind where RIM and the University of Waterloo gobbled up a bunch of real estate that used to be farmland.
Yep.
If you guys have driven down Westmount all the way up to Northwest Waterloo, Quantum Valley, they have their one of their research buildings right off Westmount before you hit Laurelwood area. Back behind there, ways away in the farmers' fields is where they're going to be building that.
That's cool.
Yeah, that's 10, 20 years down the line, ladies and gentlemen. But
Yeah.
those big projects require those types of plans. Now we're just going to skip over to our interactive map. So let's just get over there real quick, guys. This is average price points for Waterloo Region. Okay. So I want to jump on the interactive map. Like, I look at this stuff all the time, and I want to
Hmm.
really just take a look at this as perspective. From 2012 to 2017, right? We have consistent growth here, right? 2012, do I humor you guys? A single family house was 353 in 2012.
Love that.
2022, this is when we're hitting our max, just over 1.1 million. And now we're sitting closer to 800, 900,000 for a single family home. So, like,
Yeah.
I just want to put it into perspective, Adam, how insane of a run up we had between 2016 and 2022, 2023. Okay.
Yeah.
Like, everybody, we want to see more of what we've seen in terms of price fluctuation the last 2 years. I want to see 1 to 4% a year, up or
Yeah.
down.
Yeah.
More than that, either way, you start getting a little squirrely.
Yeah.
You start getting, governments, municipalities, and governing bodies and big banks, financiers reacting to these changes. And it's hard for them to get the market to a place where buyers, sellers, and investors can all kind of have confidence in which way the market's going. Because right now, there is a overall lack of confidence and sentiment on which direction the market's going and how quickly. And that hurts people's ability to make educated decisions. So, as it stands today, the end of Feb, they don't have obviously March data in. This will be released end of March, beginning of April. Single family homes up about 1%. We're like pretty much 900K. Your townhouses 615, your condos 436. Thing about condos, ladies and gentlemen, is this also lumps in stacked townhouse style condo buildings. This isn't just one bedroom, or sorry, one level, apartment style condos. So the data for condos is really skewed. We're going to talk about that in a second. And then semi-detached, those are 670. The price gap between townhomes and semi-detached were supposed to start to diminish, but they're not as much, primarily, Adam, because they consider stacked townhouses as townhouses, even though it's like a townhouse and a condo had a baby. So categorically, it's kind of skewing the data. But a traditional 2-story freehold townhouse and a traditional semi-detached, the prices between those are getting much closer because the square footage, quality, and sizes of them are very, very similar. Okay.
Yeah.
So these are your average price points. As you can see, pretty much after we had that big rundown between, the beginning of 22 to the summer of 22, we've, aside from a nice little run up in June when people thought things were going to get sexy again, we've been between kind of 850 and 950K fluctuations over the last 2 years,
Yeah.
right? Especially the last kind of 12 months, we've seen a slight trend downwards because they weren't announcing yet that interest rates were going to come down. Now
Yeah.
that they've really kind of gotten hot on the interest rate cutting train, because we've just been getting shafted
Just getting
with this
smoked.
tariff talk, with
Yeah.
political instability, right? Bank of Canada's be like, hey guys, things are going to be rockier for longer than we expected. Let's make money cheap again and get those Canadians spending. So we will see a little bit of relief for you that are on the variable mortgages. We will see a little bit more opportunity for quality financing for people. They will start to relax some of the financing rules and regulations. They're already talking about getting rid of the stress test or adjusting that. No guarantees, guys, but we've gone through a couple of years of pain. I expect there to be a little bit more stability as the market really finds its feet in terms of how low our interest rate's going to go. Our price is going to slide any further. Next 6 to 12 months, the dust should settle depending on the political environment. But to hammer through the rest of these charts, Adam, the ones that I really like to look at, we're going to get days on market in a second, but months supply. This one, I know this looks insane to look at on this YouTube video, guys. If you want me to send this to you, you want any of this raw data, send me an email. But what's really interesting is we went through such a period of low inventory. This is below 2 or 3 months of inventory for like almost 10 years, from 2020, 2014, 2015 to about 2024, 2023. We had less than 2 or 3 months of inventory across the market. Like, that is a strong seller's market. which
Yeah.
means the sellers just had so much more power and weight in the negotiation and their selling tactics than you buyers and investors out there, right?
Yeah.
We are getting to a point where, depending on the market segments, we are starting to find that balance. So let's talk about that, Adam. Condos, that green line that's above everything else. This one right here. Sellers, you don't have a ton of negotiating power right now. You don't have a ton of leverage because there's too many sellers for how many people want to buy condos.
Yeah.
The investor market for condos is dried up, Adam. Investors can no longer speculate on these, and they can certainly not cash flow them with 20% down. So some of them are fire selling them, or some of them are taking losses on them, or some of them are trying to sell them at prices that are so much higher than what a buyer's willing to pay that they're just sitting on the market and inventory is just stacking, 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 stacking. Okay.
Yeah.
So the sellers, you really got to be aggressive with pricing. You got to make it show well. You got to market the crap out of it. We have condo listings right now. We're getting some action on them, but this isn't 5 years ago where you could just put it up and sell it in 2 weeks.
Well, and by the
Okay.
way, like that last slide describes average condo price at like 450 or something like that. And 2 slides ago, we talked about average rents, right? And so your 2 or 3 bedrooms are only netting you around 2 grand. And so, guys, just real quick napkin math, like it's not that hard to see that speculating on this is very risky because your exit strategy is either to sell in what is considered a buyer's market, not a great exit strategy, or try to rent it out, in which case, just based on those numbers, right? Your purchase price is double the value of your rent. So it's never going to cash flow. And we're not even factoring in like condo fees and other things like that. So,
Yeah.
I love looking at this data, but I want people to stay like laser focused in on like, what can I take out of this? Like, what's the napkin math? What's the so what as I'm looking at these charts?
Yeah. The so what is so important. The so what for condo owners is, are you willing to take a loss for a few years until prices recover? If not, all right, what's the best way to either get better financing, to get more cash flow out of it, or to exit it so that you're not operating at a loss and you can move your capital into a into a better investment, right?
Yeah.
The so what for your single family, buyers, sellers, or investors is single family detached homes, especially those under 750, and even those ones under a million. Typically, as long as you don't screw the pooch on your marketing and pricing strategy, you should be sitting pretty. You should be looking at a sale within the first 30 days or less. You're likely looking at a conditional offer. If you're doing a freehold detached under 750, you can price it for multiples and you will, probably get a couple offers or a little bit of attention on that. But generally speaking, those properties are selling pretty close to what they list for as long as they're priced appropriately and they are selling quite quickly. Your townhouses and your semi-detached, though, Adam, is like I said earlier, the stacked townhouses. A lot of those are coming to market. People are buying stacked townhouses, condo townhouses, as those types of products were being built a lot more and sold more aggressively here in town because they are more affordable options compared to the $1 million detached homes that are being built and sold. We're seeing a little bit of inventory buildup for those. Not a ton, but a little bit. So for buyers, I see opportunity for you to potentially negotiate preferential price and terms on those because some of those sellers may be more motivated or may truly be hurting. And for sellers out there, it may be worth looking at what is available now and what you can get now, as opposed to waiting another 3 to 6 months as more of those properties come to market and the prices and negotiating power kind of softens for you as a seller. Okay. Um, and then, the semi-detached, it's just not going to be a popular market. There's so few of those guys. Semi-detached is really, they're not building nearly as many anymore. Days on market, we'll touch on real quick before we move on. This data is really skewed. So days on market is a good pulse check for how long things take to sell. But what's really kind of skewed by this is the condos. It says 25 days. That is for the ones that actually sell. The bulk of the market in the condo segment isn't actually selling. So it's really tricky to get a grasp. If you actually sell a condo, chances are you're getting an offer within the first month and then another week or two for the conditional period. So you're probably selling it within a month, maybe two, if it's actually going to sell. But the majority of condos are just so out to lunch with their prices, or what they'll do is they'll cancel their listing and
Cancel
then
it. Yeah.
relist it at a lower price. And then so if it does sell at the new price, it's only at how long that listing was up for that or that refreshed price. So
Yeah.
there's so many ways for this to be gamed. I think, like Adam said, and I'm just going to keep piggybacking off, is the so what there is you need specific advice for your specific property, because there just is so much more variance in our market between market segments and even specific locations within our market segments. Like the condo market in Cambridge is totally different than the condo market in Kitchener. And that's totally different than the condo market in Waterloo. Same with the single family detached. There's so much variance in price point and location right now, right? You're just seeing a lot of inconsistencies. So a lot of the questions that I've been getting at them is, oh, well, what would this potentially sell for? Or if I had to rent this out for this long, what would the value be in 6 to 12 months? And it's just like, there's so much more information that goes into giving you guys a quick answer on that. And I'm like, a lot of my job is doing research and giving scenarios and some numbers behind those scenarios to help people make educated decisions. So just, if you want real advice, get specific. I guess that's kind of the so what and the takeaway. And then we're just going to cover our list to sale price ratio. This is our spicy ratio. I haven't been doing the spicy ratio on the videos the last little bit. It's just so funny here. All right, 2017, we had a shortage of inventory. Bang, 10% over asking price, 15% over asking price. No problem, Adam. And 2021, 10%, 15% over asking price. No problem. 2022, 20, 30% over asking price. Oh, no problem. We should be around 97 to 98% should be your typical list to sale price ratio. If you're thinking, Zach, how should I sell my property? What should I do to expect? If you think your property's worth $1 million after doing research and you list it at $999 or you list it at $1 million, you should be selling within 10 to 25 grand of that price if you price it right. Right. So this is also a little skewed because a lot of the properties that actually do sell, not the ones that are on the market, the ones that actually sell, which is what you really need to be looking at if you're considering moving a property or making an acquisition, because what's on the market is a good reference, but is not as relevant as what's actually being sold and closed.
Yeah.
Okay. Like it's, it's kind of like a compass, right? You want to go north. All right. North is where all of the sales are. I want to be looking at all the sales and see what's there. It's important to also know where east, south, and west is as a little bit of a reference to make sure you're heading in the right direction. Well, the east, south, and west is all the sales that haven't happened yet. These are all on the market, active listings, what they're priced for, how long they've been on, what they look like. So the spicy ratio is you should be selling close to what you're asking for. Unless you're a condo, those are traditionally selling at least 3 to 5% under their original asking price, just because there's so many on the market, guys. Okay. Yeah. So let's hit some quick hits. We'll jump back over the slides. So key trends to summarize, if you guys don't want to hit the interactive charts, you don't need the numbers and the data, you want just like a Zach notes, condo market saturated. You're trying to sell a condo. I am the team condo specialist. So hit me up. Happy to value them. Happy to give you a cost benefit analysis. But we're going to be aggressive with our condo sales, guys. Freehold under 750, hot fire. If you're looking at freehold detached under 750, pretty much anywhere in Waterloo region, there's a lot of attention on that. Anything freehold under 750 will likely get a good amount of attention. Detached under $1 million, still moving strong. Conditional offers common on pretty much every market segment, right? In summary, there is more balance in our market than there has been in probably almost 10 years, but it's very segmented and fragmented. So there isn't much balance in the condo market right now, but in freehold townhomes, semi-detached, even the stacked townhouse condos for the most part, and in single-family detached properties, it's almost equal power between buyers and sellers. Almost. Buyers are getting a little bit more preferential financing now that rates are coming down. Sellers still have a little bit of competition, but not so much competition. They have to be really freaked out and worried if another property in the neighborhood comes on the market. We're not at crazy levels of inventory in any segment other than condos right now. All right. So you investors out there that stuck around, that wanted the good, this is the interesting part. There's 20 sales out of 131 listings in the last 90 days. So this is on market, all multi-units, 2 units and up in all of Waterloo Region. There's 131 listings on the market. 20 of them have sold. So 15% sale rate. Last month, I did the same data, 21% sale rate. Now, the smarties out there are like, oh, well, Zach, there's more inventory on the market because we're heading into the spring. You got it. But there's also listings are actually staying on the market longer because I am seeing people try and sell multi-units at absurd prices.
Yeah, people are insane.
And that's always going to be a thing. So maybe I just get my gripe out of the way, Adam, but just like absolutely batshit crazy prices. Yeah. Like How can I have a triplex that's making 4,500 a month at 1.3 million?
Oh,
I'm
it's only 400,000 a unit, bro.
moment of silence
Yeah, everybody take a
for
moment
those
of
people.
silence.
It's not happening, right?
No.
As my like I'm 50-50. I 50% of my deals are listings, 50% of my deals are purchases with my clients, right? So like I work on both sides of the coin. The prices for a lot of asking prices, especially for properties 6 units and under, kind of that under 2 million, are the rents are just out of control for the prices they're asking and the financing options that are available. And we're not seeing sellers motivated enough typically to offer creative solutions to bridge that gap. They're just like, oh, well, I think it's worth 1.3. So if I don't get 1.3, I'm just not going to sell it. That's fine. There's always going to be sellers out there like that. But like, find the motivated and learn all the different financing options like
Yeah.
the back of your hand.
Yeah.
That being said, there are good deals out there. So, like this one, this is not my listing. This is not advice. This is
Pretty building.
merely a photo of a multi unit property that may or may not exist, right? This is
Hmm.
not my listing. Purpose-built property, brick built, multi-units. This is between 15 and 20 units, right? Something like this, there may be options to buy it with less than 10% down. Long-term buy and hold, cash flow from day one, similar play to the type of deal that we did down in London, because you're taking advantage of creative financing options that are now available that CMHC will insure,
Yeah.
right? So, like the problem will always be price for rents. That is always the problem. Adjust for condition, adjust for location, all that jazz. But like price for rents is the name of the freaking game. So if I can get an okay price for okay rents, but I have sexy financing that sweetens the pot for me, okay, I'll take a peek at it. Right. Next one, 3 unit property in Kitchener. So this is a legal triplex. 2 of the 3 units are not rent controlled and are brand new as of 2 years ago, fully permitted. A tenant's already placed in there. This makes over 6 grand a month for $1 million. Okay, so if I just did the quick napkin math, the so what is you could put 20% down and your cash flow 500 a month.
Yep.
Okay, listen, I was people were buying duplexes, triplexes, and fourplexes 3 years ago that were break even for 300 grand more than this.
Yeah.
Guys, so I get it. People have felt the pain. Maybe you're a little tight on cash. Maybe you just want to see that the market's going to react. I'm telling you right now, there are people out there that are willing to sell properties and make deals work. And it is more likely that prices will be higher in a year or two from now than they are going to be the same or lower for good assets. So even if you spend the next year or two shopping for properties, if you are actually spending that much time shopping for properties, one, you're probably being a little too picky. Two, you will know a market very well and you're almost guaranteed to find a really good deal. There is no way I'm looking for a client for a multi-unit property for more than 12 months without finding multiple good opportunities. Whether they can make the financing work, whether we find stuff in the inspection or the sellers are being unreasonable, like those are all variables that are a little out of your control. But like guaranteed, if I'm looking with a client for 6 to 12 months, we're finding a handful of really good opportunities to take a good swing on. So these deals I send out on the investor hot list every single month. These are 2 that are available right now. We have a handful of off-market deals, couple in Waterloo, no, a couple in Kitchener, 1 or 2 in Hamilton. I'm working on one just outside of Kitchener right now as well. So if you guys aren't already on the investor hot list, send me a quick message. That's my email address. If you have specific questions to me, link is in the description for our contact form on our website, Adam. They can go in there, they can fill the investor hot list anytime. I share little nuggets like this economic data on like 1 or 2 lines, and then I'll feed you guys a couple good deals. If I have events or if I have other networking opportunities and details, I'll put those kind of at the bottom if you guys are interested. But like I just got to really harp on 2 things real quick. If you're buying and selling primary residence right now, like very balanced market. So like you have more opportunity as a buyer now than you have in almost 10 years, right? And interest rates are, starting to get a little bit more in your favor. As a seller, price it right, make sure it doesn't look like shit, market it to the right people. You should move it, right? For you investors out there though, like our early adopters, I'm busy right now. Our early adopters started looking at stuff at the end of last year. And if they haven't picked up something yet, they're offering on stuff and just finding a motivated seller, right? Volume of opportunities, motivated sellers, be specific with what you're looking for and get your criteria. Like Adam has harped on this to me and on our videos and on other people's videos I've watched on the channel so many times. It's like, get your criteria, pick up the freaking phone, start making calls, start letting the offers fly. Like, and if you're not going to do that, no worries. Go partner with somebody that is going to do all that and be involved in a different part of the deal. Cause like I do see a bumpy road in Southern Ontario for probably another year or two in terms of just like short-term like gains and appreciation in rental income and asset values. But like long-term, guys, Southern Ontario is not building enough real estate, period. So,
Yep.
I'm looking at some boring buy and hold, long-term hold stuff, and I'm looking at some short-term, infill development projects that I can be a little bit more active, recycle my capital a little bit quicker. So, that'd be great to talk on the next video on that, Adam. But if people have questions or concerns in the meantime, send me an email. We'd love to connect. And I'll see you guys on the next video. Next one's going to be great. I'm looking forward to it.
That's fantastic, Zach. Thank you so much for coming back on the Canadian Real Estate Channel. Appreciate the masterclass today on Kitchener-Waterloo. And for you guys interested in networking and getting out there and getting deals, please sign up for that investor hot list. It's one of the best strategies you can do, and it costs you nothing. So get
It's
on
free,
there.
baby.
It's free. Who doesn't love deals? All right, Zach, we'll see you back here next month. Thank you so much for coming on the channel.
Thank you, guys. See you soon.